All right. Well, here we are. It's Friday. We got another What's on Your Mind. Justin and I are pleased to host James from Bloomberg Intelligence, who covers ETFs, and Nick Rygiel from Ironclad Financial, who's an advisor focused on digital assets. How's everyone doing? What a past few days and weeks. I'll tell you this. I was at a conference yesterday. It's the LW3 conference in New York. And my daughter woke me up at 2 a.m., so I hadn't slept well. And so on Twitter, I was visiting violence against stocks like Beyond Me and SoFi on account of that, unfortunately. And by the afternoon, the Ethereum ETF news hits, and you could see the energy and the vibe at this conference, which is focused on digital assets, just change. It wasn't ebullient, but it wasn't bubbly either. But there was pep in step. So that was my kind of experience of that. What are your all's reactions to what's been happening out there? Any which way you want to go. Good.
James, you want to start?
Yeah, I mean, so the first news was that they registered the trust in Delaware, right? So like I was like, huh, somebody jumped this, and you could see the price like immediately move, and it actually started moving a few minutes before I saw it. I saw it right at just after 10 a.m., like 10:01 a.m. essentially, and it was tweeted at 10, but like the price was moving 10, 12 minutes before that, and very divergent from Bitcoin itself. So that was the first news. And then we got confirmation they followed the 19B4, which is that regulatory filing where all these issuers, they need to basically file for a rule change to list these types of things, specifically Bitcoin ETFs or Ethereum ETFs in this case. And they filed it. So last time when they registered the iShares Bitcoin Trust, they didn't file that 19B4 for like 7 days. So I didn't see it till June, whatever it was, June 15th or so, and it was filed with the Delaware to make the trust in Delaware on June 8th. So part of me wonders if they would have actually filed that 19B4 yesterday after market close if it hadn't made such a big stink on Twitter and basically everywhere. Every media source was covering it. So but it was obviously big news. To be honest, for me, I've been saying this and I've said this in multiple cases. I'm not surprised at all. Like I was expecting this to happen, maybe not necessarily right now, but like I thought it was going to happen within the next couple of months. Like almost, I would have bet my life on it. So not at all surprising to me, but surprising how it came out, I guess, is how I would say it.
Totally agree. This is a highly telegraphed, to your point. I mean, CoinDesk was covering this. We all knew the Ethereum ETF was coming. Here it is, and the price moved. And for the last month and a half, people are complaining about Ethereum prices not keeping up, and now it's closed the relative gap and still moving today. Nick, what's your perspective?
Yeah, I mean, it's one of those things where you kind of, I think James is right. There's an expectation, so it's not a surprise that it's happening, but it's also a surprise that it's actually happening now. So it gives more of the what are the next steps, and I think it does wake up people now to actually saying there's something viable here, and there's something that we should maybe take a look at. And I'm sure it just brings people's questions up to mind, and it moves the conversation forward.
Absolutely. Justin, any reactions?
Well, I think there's an interesting psychological component at play in terms of markets moving, right? Everybody knew an Ethereum ETF would be proposed in the future, right? Everybody. And yet the prices moved when these things were announced. I mean, there's still no ETF, right? I mean, like, there's no Bitcoin ETF, there's no ETH ETF, and yet just the announcement that these things are going to come in the future is moving prices, which I think I'd like to understand why, like who's buying it as a result of that, and then who's going to be buying it as a result of the ETF actually getting approved by the SEC in 2024, assuming that happens, because it's not really any different than it was a few days ago. And yet, the markets reacted to this action. So I'm just always curious by that human psychological behavior.
The other thing I would point out here is this is the fifth or sixth filing here for these ETH ETFs, right? So Invesco Galaxy already filed for one, Grayscale filed to convert ETHE, and then ARK and 21 shares alongside Van Eck filed way back in early September for these things. So this isn't the first, like, first of all, this isn't the first ever. There's been multiple, just like Bitcoin ETFs, people have tried to launch these in the past, but this isn't even the first in this wave. We already have deadlines that we know are hard concrete on ARK and Van Eck at the end of May. So we already know the ultimate deadlines for these 19B4 applications. I think it's the name. It's BlackRock. BlackRock are in the space is what everyone's seeing, and I think there's a lot of people out there that didn't realize that this race has already started as of basically early September.
Yeah.
You know, absolutely, fully agree here. I'm about to share my screen here showing the discount to NAV, which has come in on the Ethereum Trust as well. It's down about.
By the way, Ram, as you pull that up, I think
16%.
that
The discount to NAV is 16% or so. Now, yeah, go ahead. Sorry.
Oh, I was going to say, as you pull that up, I think James made a point
see that
that is relevant to the things that we've been talking about, which is brand. Brand matters, right? Like we've talked about it in other contexts. There's brands that are growing. There's brands that are dying. BlackRock as a brand moved the needle.
Absolutely. You know, Bitcoin is king of digital assets and BlackRock is king of asset management. So when the king moves, everyone follows, and that's what's happening here. But you know, what's interesting about, you know, Ethereum was getting a lot of criticism from holders because it wasn't responding to price action. But you know, our expression had been around ETHE because of the discount to NAV, which has rallied dramatically. Even before the announcement, I mean, this had gone up 40% in just a 2-month period from August to September, and through a bit of October as well. So, you know, this instrument has gone up over 200% year to date. You know, I've said it before, we're going to miss when these discounts close, and they will close when those ETFs are launched. But the opportunity is getting narrower and narrower. Here's GBTC, which has also been a compelling opportunity. It's got about 11% discount to NAV here as well. You know, on November 16th, almost a year to the week, these discounts were around 43%. Of course, that's during the events surrounding Genesis and all the rest. So I think that's one of the reasons why Ethereum hadn't performed, is that people were focusing on the Grayscale products because you could get functionally similar spot exposure, but through a cheaper expression. So that marginal dollar flowed into that product. That discount to NAV was closing gradually over time, but hadn't expressed in the underlying spot commodity, which is Ethereum, right? So, but James, like, what do you see on the outlook for timing of a Bitcoin ETF, timing for Ethereum ETF? I'm hearing a lot of chatter around January. I know it's a moving target. I know you're on top of it. What's your perspective?
Yeah, so I mean, we haven't really changed our tune since essentially August. We've been 75% by year end. We moved to 90% by January 10th, which is that ARK and 21 shares deadline. They were the first filer. They're the first ultimate deadline. There's all these deadlines in between that I'm going to keep saying when I'm talking here, so I apologize in advance. But there's all these dates, and the SEC either has to approve, delay, or deny. They can only approve or deny on January 10th. So I personally don't think the SEC is going to be able to deny these 19B4s, those specific rule change proposals I spoke about. I don't think they'll be able to deny in January. Now, again, these are deadlines, right? So the SEC can go as early as they want. We saw them go massively early on a bunch of this in the end of September, right before we were looking at a potential government shutdown. The SEC just like basically cleared the slate, and stuff that wasn't due until November was decided on, right? So they delayed on a whole bunch of stuff. But right now we've just entered a window where when the Cointelegraph tweet went out that it was approved, it couldn't have actually been approved, as Joe Colasar pointed out. I'm probably butchering his name, I'm sorry, but he's been saying the whole time this never could have happened because they were still in the comment period. So essentially, once these delays happen, they open it up for public comment. So anyone can go in and put their name, or a fake name really, and say whatever they want about those proposals. And then there's also a period where the SEC can do a rebuttal comments. But essentially, that period ended on November 8th. So starting yesterday is this period window where all 12 applicants for the spot Bitcoin ETF could theoretically be approved if the SEC wants everyone to go at the same time. We saw them do that with ETH futures ETFs. We've been saying at Bloomberg Intelligence that that's what the SEC was going to do, because that's what the SEC has been signaling to issuers. They don't want to play kingmaker like they did with BITO, the ProShares Bitcoin futures ETF. So right now we're in this small little window. November 17th, there's 2 ETFs that are up for decision. It's Hashdex and Franklin Templeton. They're up. They're going to have to delay by November 17th, and Global X is due for a decision, likely a delay or possibly approval on November 21st. And essentially, there's this window right now where they can approve all of them at once under the 19b4 process. So I think that's kind of unlikely. I don't think the SEC is ready to do it yet, but theoretically they could approve that 19b4 process. The thing that most people are missing is there's also this other process that needs to be completed. The prospectuses need sign off from the SEC. These S1s, these amendments that I've tweeted out and other people have been talking about, it's basically they're dealing with a separate division of the SEC, which has never happened before, which was part of the reason why we went to 90% by January 10th, because the division of corporate finance has never really talked to these Bitcoin ETF issuers before this. So that's why we're confident, because this is completely new. Like, this is something that has never happened before. So we think that process needs to be completed. So we could end up in a situation where these things are approved on the 19b4, but still not ready to launch because they don't have sign off from the division of corporate finance on their prospectuses. So that's where we're at with the ETF. So like I do think the approval is going to happen by January 10th. The launch might not necessarily happen right when those approvals happen, because you need both the approval from the Division of Trading and Markets on those 19b4s, and you need approval from the Division of Corporate Finance on the S1s or S3s in Grayscale's case for GBTC. And then you asked about Ethereum ETFs. I said that the VanEck and ARK filed September 6th, I think, or early September. I don't remember the exact date, but their ultimate deadline is the end of May. So I think the odds are pretty decent that the SEC will approve them, because the process for spot, where we got to now, is CME launched Bitcoin futures. Then we got Bitcoin futures ETFs. Now we have leverage Bitcoin futures ETFs, and now we're looking at spot. Ethereum is kind of in the same boat. You got CME futures. Now you have CME futures ETFs. You have inverse Ethereum futures ETFs even. So it makes sense for spot. That said, it's not nearly as concrete as Bitcoin. You don't have the same situation with the Grayscale court case. And I wouldn't be surprised if the SEC tries to hark on the whole idea of staking and different aspects that make it different from Bitcoin, and they try to deny them. But theoretically, we could be in a situation where these things are approved by May of 2024. I don't think I'm not super confident that's going to happen, but those are the dates we'd be looking at.
Got it.
Hey, James,
great
follow-up
analysis.
question.
So on or before January 10th. Go ahead.
Yeah, follow-up question is, you said you don't think the SEC will be able to deny in that January deadline. I would question what you mean by that, because, like, of course they have the ability to deny, but I think you meant something else. So what did you mean by that?
Yeah, so basically this has been going on for over a decade, right? And what's been up happening is SEC's been putting up roadblock after roadblock after roadblock, and honestly moving the goalpost in some cases. And these issuers have basically bashed through those roadblocks one after the other, until it got to a point where, like, some of the roadblocks just didn't make much sense, and that's when Grayscale sued the SEC. So the Grayscale lawsuit, which they won in unanimous fashion, and that decision, as far as I'm concerned, and I have a colleague, Elliot Stein, who's a litigation analyst for us at Bloomberg Intelligence, it basically leaves no wiggle room for the SEC to continue denying those ETFs on the same grounds that they've been denying it for the last decade. So either the SEC is going to basically have to find a way to thread a needle for the ultimate decision was basically you can't allow Bitcoin futures ETFs and not allow spot. That those two things don't work out. So it's going to be very, very hard for the SEC to find legal grounding to deny these products, right? Under the 19b4 process. That other S1 process, I mean, I could see, knowing Gary Gensler and his view in the space, he could really try to hold things up on that. Who knows how long that could take. It's definitely coming down from a commissioner's it's coming from top down essentially right now at the SEC. It's not a lot of the things at the SEC, vast majority is that the SEC staff is making recommendations, doing something, and then following through with the commissioners. This seems to be a little bit more the opposite direction, top down, on what's going on. But you're right, it's not that they can't deny, it's just that it's going to be very hard to find legal reasoning to do that and thread that needle without opening themselves to other issues and potentially further court losses that they've already sustained enough of those in recent months.
Nick, what's your take on what this means for the rest of digital assets and altcoin season seems to be here. Any other perspectives?
Yeah, I mean, I think the time frame is one of those things where now people have a set expectation of it could happen at any point, but more than likely, let's wait until the beginning of next year. So in the meantime, I think the on-chain activities are picking up once again, because like everything else, it's this game theory at work of, okay, if this is going to get approved, and we're seeing it live time too. I mean, Justin's right. Why is the price going up? If someone was looking at this and saying, okay, I'm going to be allocated the way that I should be allocated, and therefore there shouldn't be any activity once this information is that's already been known, is kind of more known, but yet we're seeing this kind of knee-jerk reaction of, I think, a fear of being left behind, especially for those that might have been in this space, and then they're second guessing themselves now. So I think there's a lot of behavioral cognitive bias going on, because we really don't know what the level of interest will be to the greater community. But speaking from more of the advisory standpoint, I think one of the major challenges for many advisors is not even understanding how the platform works. So if it's hard for them to even explain Ethereum, let alone the difference of mainnet versus one of the EVMs, they're going to be lost. But they do understand ETFs. They understand asset allocation. They understand speculation. They understand their client profile. So this opens up a lot of conversations where a client might say, let's go all in. And the advisor might say, no, let's not go in. In the past, they could easily say, I can't help you. And they put their hands up and walk away. If an ETF gets approved, then the question is like, well, okay, the access is there, the platform is there. I trust BlackRock, or I trust FanEck, or I trust these other issuers, or there's a relationship with their extreme. I mean, I look at BlackRock and I see just how strong their kind of networking is, with a full strong network of advisors and consultants and everything like that. And then I look at what FanEck is doing online to try to go towards the community, trying to do their work of kind of showing themselves to be very vested in the developers, and I think the continuation of building more on these platforms, whether that's Ethereum, Solana, or Bitcoin even. So I'm thinking that's going to be the catalyst, if it already is, of people looking at what other communities are out there. What can I get to become part of now, so that I can get maybe a little more of an understanding of what's been occurring for these past couple of years. And I think that's what's going to happen even more. So I don't see the ETF being the end all be all, of course, but no one is. It's just another spectrum in the continuum of ways of accessing this information. And I think once that it's within reach, then it's more of an incentive to learn a little bit more, right? A little bit more. And I think that's where we are. And I think that's why people are quickly responding, because it gives them a goal and a deadline now. Even if it's not a true deadline, in the sense that they could always kind of kick the can down the road from the SEC perspective, but for people themselves, I think it's a deadline.
Yeah, absolutely. Something to focus on. So quick statistic here I'll share from Bitwise. So Bitwise at this conference yesterday, and they're doing a survey of advisors, and they asked advisors the probability they expect an ETF approval in 2024. And a strong majority did not expect an ETF approval in 2024, which seems way off from all the conversation we've had thus far. So doesn't seem like that is yet consensus or priced in. Another data point too, just talking to various people, this person had a conversation where they said, so when will we be in a bull market? I find that really confusing. People are letting these technical definitions get in the way of how they make decisions. In the same way, when people say, is a recession 2 consecutive quarters of downward GP? Like, what relevance does that have in how you make a decision? Are you going to wait for that phenomena to take place? And then what will you do? Because usually that's the time you should have already been buying. So anyway, just sharing some data points. I think the main point there is that, look, there's still a lot of liquidity out there. I think people are performance chasing. I think you see that in multiple markets. You saw that with China when it came close to the lows, coming to a multi-year retest, didn't get there, then rallied. You're seeing that with NASDAQ up something like 8 days in a row in digital assets. But we still have room to go, but there's a lot of short-term optimism and a short-term sentiment. So that is an observation. I never chase green candles, so I'm not doing anything right now, but am looking down the curve to other digital assets that I think might benefit. I don't know, James, if you got a view, like, is there another ETF we might expect? I'm sure people in Solana are saying, gee, when is Solana ETF coming? I think that's a bit premature personally, but I don't know if you got a perspective there.
Yeah, I have like three things I want to say. First, I want to say, going back to kind of what I was talking with Justin earlier, there's a reason we're at 90%, not 100%. It goes back to Gary. We're never going to go over 90 essentially, because there's always the risk that, because he reports basically to Elizabeth Warren, and they're very anti-crypto. So there's no telling how far he will go to stop these things, which goes into your question here a little bit, in the fact that the way we view it is Bitcoin and Ethereum have been like kind of pushed off on their own. They have the CME futures market. They're more regulated. Ethereum's a little more up in the air, but in my view, it's essentially mostly established as a commodity with the way that the futures are registered. So they're being treated very differently than everything else. Now, again, I think Bitcoin is like up here and Ethereum is here, and then it's like everything else like off the screen as far as I'm concerned with an ETF, as far as an ETF goes. So to get like a sole ETF, you would literally need like a change of administration, like somebody else running the SEC potentially, and even then there's no guarantee that would happen, or like a market structure bill or act of Congress literally in the near future. Now, things do tend to move fast, and I think it will happen eventually. It's a matter of when, but that timeline is still pretty far out. The Bitcoin and Ethereum ETF stuff is a little more prescient, I would say. And then on something that Nick was saying about like advisors having to go and say, I can't help you here. Like, that's one of our big things for why we think the ETF matters, because it's not just that they can't help you. It's also that, like, if you're an advisor, like, with an ETF, you can put that under your umbrella where you charge your fee, right? Like, if it's at Coinbase, you have to set up all these other third-party connections and different things. And if you're an advisor and it's like, I'm going to put 3% of my client assets in here, or 5%, like, it's not worth it to set that up for the most part. It's like, but an ETF, if I'm only going to put 1%, 3%, all of a sudden that makes sense to put in a client portfolio. So bringing it under the umbrella of whatever fee you're charging, a lot of it RAAs charge an AUM fee. I think that will help draw demand. Now, again, I don't think it's going to be like an instantaneous blow up like we saw with Bitto, but over the longer term, people will allocate. That's my view.
Totally agree. It's a great point. I fully agree on your point on Solana as well. Ethereum has its own type of Lindy effect. I don't believe the SEC views it as a security, and so it's going to ride those rails into the markets. Justin, you want to say anything?
I'm just curious if there have been in the past situations where a investment opportunity, whether you want to call it a security or a commodity or whatever, has been so publicly available and traded and hyped in a cycle, a multi-year cycle, that then gets to a place where it becomes a ETF, right? Like, it seems like these things are moving a little backwards, and I think it's interesting from a pricing dynamic what that means. I mean, typically it's like more access over time, but here there was like incredible worldwide access for anybody with a computer to invest in these technologies. And now here we are a decade later saying, oh, well, maybe we'll get an ETF that can be traded.
Yeah, so it is backwards for the most part. Most of these things, it kind of goes institutions first get access, and then retail gets it in punts bags. This is kind of reverse of that. The most analogous way that I can look at this, and you've heard other people make this, is the gold ETF launch in 2004. It was one of the biggest ETF launches. It definitively impacted the pricing of gold. It went on a pretty big run through 2011 but that was also during the financial crisis. So, but it democratized access, which this isn't necessarily going to do. So it's not apples to apples, but it is a good thing to look at. Like, people are like, oh, look what gold ETF did to the price of gold. Well, not everyone. If you wanted gold back then, before the gold ETF, you either were an institution who could get access to futures or actually trade spot through a bank, or you were going down to a pawn shop to buy coins or something, right? Like, that's how you got access. So it wasn't the same thing. Whether this, like, if you really want access to it, you can just do it on your phone with a Coinbase app or Gemini app or what have you. So it's not apples to apples. But the thing is, like we've been talking about, advisors don't really have a good, easy way to get access to this right now without going through a bunch of other loopholes. In institutions, a lot of them can't actually hold these things because they're restricted based on what they say they can and can't hold. So they're like securities or bonds, and that's it. So they can't really touch commodities. They can't touch these types of things. And to be honest, a lot of institutions don't want to be bothered with the security risks of holding like Bitcoin in a cold wallet or hot wallet, what have you. So like this, they would be more than happy to pay a fee to have somebody take care of that and offload those risks from them, which I feel like a lot of people in the crypto crowd, like crypto natives, don't understand. They can't grasp that kind of thought process.
Right on. Advisors want to
Yeah.
advise. Yeah. Good.
I think that's what makes it so interesting to me. And I'm hoping that Ram, who's got a sharper eye and mind for these kinds of things, can help me think through it, is what does that imply for potential pricing, right? If the people who have actually been held back from this asset class are traditionally the people that are big dollar movers in assets versus, obviously people made a ton of money as individual investors and rode up these assets. They're not, it's like the tail wagging the dog, so to speak, right? Like the big money that could be coming into this space in the next couple of years that's been held back on the sidelines could be more substantial than we're thinking.
I agree. I mean, look at the backdrop here. And Nick, let's get you in here as well. I want to hear your perspective on knock-on effects in a second, but like the intellectual battle around digital assets is in ascendancy, right? You've got Larry Fink, you've got Mohammed El-Arian, who is head of Harvard Management Company and the co-CIO of PIMCO, who's talking about Bitcoin. And you've got trust in institutions like the Federal Reserve in decline due to inflation. And you have these use cases where people are in, Argentina and Lebanon and other countries where inflation is run amok. And there's an opportunity to have a global asset that allows people to transact and make payments and store value, and and that thesis is on the rise. So yeah, no, it's a really compelling background set of conditions. But to your point, James, like when BlackRock actually launches this, how do they market this to their clientele? How far after January 10th does that happen? There's a lot more we need to unpack between now and then. But Nick, any other reactions? I also want to make sure we get your perspective on knock-on effects into the altcoin. I know tokens like Filecoin are ripping. I could list quite a few. I'm kind of hesitant to do that.
Me too.
Stop saying tokens.
Stop saying tokens.
I think the knock-on effect. I mean, look, I back I was in the Navy is always about like kind of like the right kind of spectrum of looking at risk and probabilities and things like that. But there's also just like the concept of within any type of system, like who are the people that have the capabilities, who has the opportunities, and then the final part is the intent. We know that there's absolutely folks out there with the right risk capacities and the right risk tolerances, and when the capability starts getting expanded to enable these conversations with their trusted advisors or with family members or with folks that, I think James is exactly right on. A lot of people are not going to exert time and energy for something they just don't see as any intrinsic value, and they don't see the intrinsic value because they're not part of it, right? So it's a lot easier to look at a platform like the internet when it was early on, where there wasn't anything of value on there, and to say, well, I don't need that because there's nothing I really need. I can read the newspaper, or I can call someone on the phone. I don't need that. So they're not wrong, but they're also not right in the sense of seeing the capabilities and the future kind of development. And if we circled all the way back to the Wright brothers with flight, and if somebody witnessed that and said, well, what are they're just wasting their time. Like, you can't do anything with that. But now we have this opportunity to start seeing who the other inventors are. So it's no longer about just the Wright brothers. It's all of those other people that came after them that said, hey, okay, there's a patent issue here. Well, we don't have a patent issue. It's open source. So now you have anyone anywhere that can take a look at this technology. And as soon as they start seeing the potential for the wealth and the accumulation of having the right killer app or the right concept, is what's going to motivate them. So not only is it the family members or the folks that are saying, oh yeah, I have resources, I had all this cash set aside. Yeah, asymmetric bet, high risk, high return potential. My advisor says they can get this ETF from whoever they choose, and sure, 1%. It's it's not the dollar signs, it's the percentages. But then it's also this other effect of these other family members saying, hey, wait a minute, let me talk to you about this. There's something else I want to show you. It opens up the conversation now, because now they see the potential, the value, because they're willing to listen. They're willing to exert time and energy of understanding beyond just the don't invest in what you don't understand. Like, well, if you understand it, then maybe you should take a look. And maybe that is another conversation to have. And I think that's what's happening right now, because it's the ETF. It's a concept of whether it's going to happen today or January. I mean, let's face it, there's so many traders that are out there that they will trade anything they can at any type of time span. So that, I think, is why we're seeing these like intraday like spikes and peaks and valleys and everything like that, because in their mind, it's just of interest. And I think they're going to say, oh, well, I'll just buy back in. Well, that's not the most, I think, longer term strategy that's out there. But these are the people that I think are facing, especially the crypto natives now, where they're just like, oh, the altcoins are waking up. And I think that's what we're seeing now, is just the speculation of what are the old adages or the old models that existed in terms of, are they going for like the, I use the quotations, blue chip DeFi tokens, or are they going for the tokens that they knew that had stronger platform effects, or people that were discussing these things? So therefore, maybe they'll have, V2 come back out, or version 3 in some cases. Then it's all the folks that are under the radar that are taking a different spin on things, because the infrastructure for these past couple of years did not stop. So we'll just kind of focus on Ethereum right now, but this is true of Solana or any other platform, Bitcoin, or anything. The amount of technology and resources and the infrastructure that has been developed in this past, I don't even want to say it's like another crypto winter either, because it never really felt like it froze. It just felt off. But things have been off everywhere. So let's just kind of embrace the fact that no one really knows if we're going to see new low time lows, or if things will just continue to kind of go in this kind of choppy upward drift, if you will. Mm-hmm. But yeah, there's a lot of altcoins now just based off of prior history. And I think there's some that are really showing that they're kind of stepping out and looking at real world kind of partnerships. And I think those are the ones that are the most exciting.
Interesting. Great. I mean, Thanksgiving last year, people had their heads in hands, right? This year, we need the Thanksgiving cycle, not just the 4-year halving cycle. I think one other observation here is, if you're in digital assets, you have to be pre-positioned, right? The big moves happen in January, a little bit May through June, and then the last couple of weeks. So if you're pre-positioned and you're patient, especially in an illiquid market, then when that capital flows in, then you benefit. But don't try to overthink it and wait for some indicator to go up or down in a certain way, and then so that's another take there. Any other observations, or should we bring it home?
I mean, the one thing I would add is, you were talking about like knock-on effects and things like that. I would say that I think it's kind of being overblown a little bit, like what this looks like for demand. Like if you look at gold ETFs, as we said, not exactly like for like, but in the US they have 100 billion. So it's not like we're talking about like obscene amounts of like institutional capital that are coming in. That's after a couple decades of existing. So that's like that I would just throw that out there, I guess, because I keep seeing people throwing numbers out there for money that's coming in, not mostly random people on Twitter, but there's other estimates from Bitwise and Galaxy that are a little more realistic about what could happen. That said, Grayscale's GBTC currently has about 23 billion if you're at current prices. So we're pretty strong on the way there. And the other thing to be watching about flows coming in and when this happens is, like, I don't know how much money is going to come out of GBTC and go into possibly these other products, or just basically exit the space because it was only like a short-term tactical trade, maybe risk-neutral traded in some cases. Obviously, wasn't risk-neutral for the likes of 3AC and BlockFi, whoever else. But for the most part, there's definitely a lot of money in there. That's that. So these ETFs are going to launch, and then also, like, we don't know what's going to happen with actual flows from these things. It could be net negative in the near term as money comes out of GBTC. Now, I know some people saying that they think GBTC is going to like get cut in half. I don't think it'll be quite that bad. I think there's going to be a bunch of people trapped in the cap gains, but I do think they're going to see some serious outflows right after conversion.
I agree. It's going to shift to a market share game. I saw this post on Twitter from Carl Quintanilla, which I thought was hilarious, because anyone remember Sugar Hill Gang? I was born in 1979 when this came out. At the stage here, I see Bitcoin, ETF, and Solana, and that's the vibe right now. So, let's see. Oops. Anyway, hope you guys enjoyed that vibe. That was fun. Good way to kind of go into the weekend. Thank you all for joining us. This is a tremendous amount of fun, and thank you both for the insight too. This is real terrific. Appreciate it.
Yeah, thanks for having us.
Have a great weekend.
Take care.
Yes, take care.